Hey, and welcome back to the Cash Flow Podcast. I'm Pam Prior, your host, and we've got a topic now that everybody in this room has had to deal with who's a business owner, and I'm guessing you have too. So we're going to talk about that one client you should fire and why they're actually costing you a lot more than you think. So I know everybody's initial reaction is, I need all the clients I can get, I've got to have money. I'm going to give you a CFO's perspective on whether or not you're really making the money you think you are on this. So let's talk about it. You've had to have this client that you really makes you crazy, that you don't want to work with. They bring in revenue. You maybe brought them on a long time ago, but they're always pushing your boundaries. They're always texting you. They're always complaining about price. They're always asking for more and more and more, and you probably priced them low, so you're getting more and more resentful. And this just goes on into this cycle until one day you realize, I hate this client. They're not good for me, and they're not good for my business. So I want to tell you, I call these profit vampires because they look like revenue heroes, right? But they really are profit vampires. What I can tell you is that I'll bet you my bottom dollar that you're losing money on these clients in total. And I'm going to talk about this as if you have a couple of employees as well. You may not, so this particular piece might not apply to you as I go through this a little bit, but definitely think about it in terms of yourself. So on paper, this client looks perfect. They're paying you money. You've got a long track record with them. You've got a good reputation with them. But bottom line, they're actually costing you money. You're losing money because they suck your time, they suck your energy, they suck your team's time, they suck your resources. They pull you away from working on the things that do bring you joy in life as opposed to not bringing you joy in life. And they may pay for the project or for some particular component of what you offer, but all of a sudden they feel like you're their 24/7 lifeline for everything. And you may be, as all of us sometimes do in the beginning, have responded by letting them do that. And now you're kind of stuck. I love to say, yes, that's revenue, but it's not income. It's financial anxiety that is disguised as revenue. It's you thinking, I have to keep doing this because of my finances. I have to keep doing this because of my finances. And it's sucking your joy. But believe it or not, it's probably also sucking your bank account. So I'm going to give you an example, and I made some notes because I had to rename the client, or not even rename it, but pull the client's name out of this. But I wanted to tell you a little bit about where I've seen this happen. And I've seen it in 4 or 5 clients, and I've seen it in my own business. Okay, this happened to be a creative agency. They were doing about $1.5 million a year, and they had one client, a big corporate client, that was 40% of their revenue. So in their mind, it's like, gosh, I have to do everything this client wants because they're 40% of my revenue. But truth of the matter was, it was 80% of their time, their stress, and their resources. So every week, twice a week, there was an urgent, this has to happen right now, email or call. If you didn't answer it quickly, if they didn't answer it quickly, they'd get a, why am I paying for you phone call after that. And it was almost like a bipolar behavior in the client where we love you, you're the best thing in sliced bread, and where were you? You deserted me. It's a very narcissistic client is the term. Generally, whenever I've had these clients, the real definition of what they are is narcissistic. So let's map it out, I said to this client. And I did it. And I wasn't even counting the emotional costs, okay? The fact that the team dreaded having the call with this client, the fact that the owner dreaded hearing from this client. When we mapped it out, just the cost of the business and the time of the employees were spending on it and also conversing about how much it sucked, they were actually losing $60,000 a year on this client. So yeah, it was 40% of their revenue, but it was causing a loss at the bottom line. Now, most of the examples aren't necessarily that extreme. In my case, I've had to fire a few clients. And when I have, it's probably about break even on the bottom line. And maybe it hurt it a little bit, but the extent that it took the weight off my shoulders, the dark out of my days, the ability to look at my calendar in the morning and not go, oh crap, it's that day. That energy that I got back, I know drove revenue and profitability into my business. And I can guarantee if you've got a client like this, you've got the same thing. So how do we deal with this, right? You can't just arbitrarily slice and dice your client base because they happen to put you in a bad mood on a particular day. But I've got a framework for this that I really want to map up for you. And it starts with a litmus test. So ask yourself 3 questions. If that client called today as a new prospect, would you take them again today at the same price and terms? Okay, question number 1. They called you fresh out of the blue. You listen to what they need. You know what they're going to be like because you have that example now. Would you take them again at the same price and terms? That's question number 1. Question number 2, do they respect your boundaries or are you their lackey? Are you at their beck and call? They constantly testing them. Okay. First is, would you take them again? Second is, do they respect your boundaries? Third is, do you like who you become when you're working with them or thinking about working with them? Okay, that's 3 questions. If any 2 of those have a no, there's only one answer here, and it really is that simple. They have to go or something has to change in the relationship. So what do you do? Once you've identified that this particular client is a yes or a no, like say they really are a client that hits no on 2 or hits yes on 2 of these questions. The first thing you want to do is actually quantify it because you'd be surprised when you literally write down all the money you're spending to deal with this customer, including, by the way, your time, which is a value, and you need to put a dollar value on it. We'll talk about that in another episode, how entrepreneurs can value their time when they're thinking about pricing. But once you do that, are they costing you money or are they making you money? So know that going in. Hey, if I do something about this, they're not going to cost me anything. They're going to save me money or I'm going to lose a little bit of money net. Forget about revenue. Revenue doesn't matter. I want to know after you've put in all the time and expenses, are you making money with that customer? The second is that I want you to try resetting their expectations. Have the conversation. Hey, look, in my business model, this is typically what I do with clients for such and such a price. You've been here long term, and I've allowed things to kind of expand into a situation and relationship that doesn't make sense for my business anymore. Therefore, I'm going to set these new expectations, and here's what the price is going to be. That's simple. They're going to do one of 2 things. They're going to stay or they're going to go. If they go, you've actually accomplished one of the, what you need to accomplish. If they stay, because you're going to give them a price that includes what I call the PIA tax, you won't be as bothered serving them. And that price needs to be sure and cover that, right? There may be a price that you can get to where you're still making profit in the business, where that price is worth the once or the redefined new once or twice a week you may have to deal with that person. But make that price big enough so that you don't ever have that moment where you go, as I have many times, oh my God, this is the person paying me the least of all my clients and they're sucking up the most of my time and challenging me on my pricing every 5 minutes. Once it hits that, they just got to go. So I offer them a price that I'm pretty sure they won't accept, and 9 times out of 10 they don't, but every now and then be ready for the fact that they might accept it. So make sure you make that price high enough for that. So here's the thing. The way to think about this is you're really not firing them. You're giving them the opportunity to work with you the way you like to work in your business. And believe it or not, that's a pretty important thing because these clients aren't just costing you money. That's all I've talked about here is money so far, but they're costing you momentum, energy, relationships with your team potentially if they're cringing every time the phone rings, and they're making you second guess your value. If you've compromised your boundaries so much, and this isn't a judgment because I've done it myself, but if you've compromised your boundaries so much that you literally are at this person's beck and call, you're going to start second guessing your own value and what you really bring to the table and why you are the leader in this relationship, not whoever the client is. You are a business owner because you didn't want to be an employee. Remember that. You're not an employee. You're a business owner who's providing a service to somebody who's paying for it. So watch out for that personality. Now, here's something you can do to make this a little easier. And I've actually recently done this, but go through your client list and grade them A to D, right? A's, you absolutely love them. You can't wait to get on the phone with them. You're making progress with them. They bring your strength to the table. They light you up. B's, they still light you up and it's a lot of fun, but they just may not be engaged with you as you need or want them to be, something like that. And then you have your C's and your D's. If it's a D, they've got to go. So you put the highest price possible on a conversation with them. And here's what I mean. Say you're charging them $2,000 a month now, and you need to decide, okay, I'm going to set new expectations and give them an opportunity to stay. Make that price $10,000, because you need to make it a price where you look at it and you go, ha, this is worth it. I don't mind the pain in the butt anymore. And it's making you profitable. Don't hesitate to do that, because remember, you've already accepted the fact that they might go. And if they go, you win as well. Okay? With the C's, definitely reset your boundaries. If you've graded somebody a C, there's something not working quite right. So look at, usually it's boundaries. Usually it's you're letting people kind of infringe on you a little more than you normally would. So just think about those and resetting those boundaries, because here's the bottom line. Number one, you may think these clients are profitable, but they're not. And if you, maybe in money, they're break even or a little bit profitable, but when you add energy and momentum and time and how you want to live your life, they are not profitable to you. I've often said this, that profit's a lot more than just about money, right? So you deserve to be working with people who energize you in a way that makes you do your best work and feel your most confident. And that's what I want for you. That's what I want for me. That's what I want for every single entrepreneur. So do me a favor, if this was useful to you to kind of have this framework to go through, hit like, subscribe, maybe share it with some entrepreneurs you know who maybe have that miserable day a week when they open up their calendar and go, oh crap, it's that day. Let's get rid of that for all of us. And you have a great week. We'll see you on the next Cash Flow.